Hi, everybody. This is the investing teacher, high school science teacher, teaching others how to invest. In this weekly update video, I'm going to go over my new positions that I did on Schwab, looking at the SNDL mini challenge I'm doing, looking at other positions in PLTR, and I'm updating my challenge with the wheel strategy and looking at some lower IV positions. Like, subscribe, share, all that good stuff. Definitely helps out the channel, and let's get right to it. All right, before I go over current positions, it's a slightly modified wheel strategy now that I moved my Roth IRA to Schwab. We're going to wheel around $20,000 instead of $10,000. Goal is to get, again, 2% a month. So the goal is $400 per month of net profit after I closed my positions, meaning I'm going to possibly make more at the beginning, but I don't know what's going to happen with the expirations. So it might eventually be a little bit lower or higher in certain months. But I'm just going to look at whenever I made the position to when I closed the position, meaning if I open the position in February and close it in March, I'm going to count that on the March numbers. Okay? I'm going to take half in higher IV riskier positions that I've been doing in previous videos. But half is going to be in a lower implied volatility, safer positions, and positions that I'd like to own, which I'm about to go over. I won't mind owning at a slightly lower share price and collect some premiums while I'm at it. My riskier starting trades need to make at least 4% a month return. Again, the goal is 2%, but I'm going to go for 4% a month, or if I do a weekly, at least 1% in the weeklies. And then I can manage it down to 2% if needed. So I could roll up and out in a covered call. I could roll down and out in a cash secured put. So I want to have a little bit of wiggle room from starting around 4% or more, and then going down to 2 if I need to. My safer starting trades should be at least 1% per month, and I'm looking to acquire stocks cheaper or to earn premiums while I'm at it. So if I'm assigned, I don't necessarily mind it. I'm just going to hold on to the shares and then collect covered calls as well. If I don't get assigned, I'll just keep doing those positions to earn more premiums of at least 1% a month. Here are some of the riskier positions that I do currently own. GTE, Grand Terra energy company in South America. PLTR, I don't mind owning it. So it's kind of a little bit of both. It's a higher IV position, but I am pretty bullish in the very long term on it, so I don't mind owning it. NLS is Nautilus. They do the Bowflex machines, and they're a pretty interesting position so far. NEO, they do electric cars in China, and they're about to go into Europe. And CVM is a pharmaceutical company. These all have very high implied volatilities, and we'll see what happens with them. My less risky ones, I want to go back into Intel. I'm pretty bullish in the long term on Intel. I still like the company. I did initially sell a covered call a few months ago at 50, and it's currently in the 60s. I did earn a good premium. My cost basis was lower than 50, so I don't mind the position. But I'm going to start selling cash secured puts on Intel to either acquire it back or get some premium. XLF is a sector spider ETF for the financial industry, and they do a pretty low implied volatilities. Premium's not too high, but I think it would be a good position to own, so I'm going to still sell some premiums on it and cash secured puts. Possible less riskier stocks I don't currently have. Bank of America, XLE is another sector for the energy sector, and Aflac. Aflac and Bank of America pay very good dividends, good dividend growth rates. So let's look at the positions that I made for the week. I did own all these in Schwab now. All my funds finally did come into Schwab, so I'm happy for that. The commissions are a lot lower, only 65 cents a trade instead of $1 per trade. That should save me maybe $25 to $30 per month. GTE is one of the biggest positions that I have, but the share price is really low right now. It's about 85 cents or so. I initially sold 6 cash secured puts for $3.19. The stock was at 96 cents. I actually sold the cash secured put at $1, so I was actually selling a little bit higher than the current price, but I made $146 in premium. I think the cost basis has to be a little under 80 cents for that to not work on my side. I did do 5 more for $3.19 when the stock price is a little bit higher, Did earn $72 in premium there. I did much further out expiration on GTE up to May 21st, so a few months out, but the strike price was only 0.5, so half the current price when I made them at the time for $145 in premium. It's a pretty, I think, relatively safe way to get $10 per cash secured put all the way up until May. So if you're willing to hold your money until May, you can make a $10 out of 50. So a 20% return in a few months, good to me. PLTR, I've been doing a lot. Separate account, I've been selling cash secured, separate account, I've been making covered calls. And this one, I did a cash secured put. Stock was at $25.90. It still continued to drop. I did make a $130 premium. It did continue to drop, so I rolled it down and out. I actually bought to close at $274, so that's a pretty big loss. However, I did sell another PTR right here. I went out to $409 a bit later than I'd like, but I made the strike price down to $22, so I went down $2, and it's a $292 premium. So the net premium on PLTR is a slight credit right now. And again, I don't mind owning it. I do own covered calls in my other account. NLS, Nautilus, was at 1963, sold cash secured put at 1750 for $95. It's been hovering a little over 18 now, so it did have a down days. NEO is reporting earnings on Monday at close. It was almost $50 when I made the position. Strike price at 40, so I think there's a good buffer there for $92. This is one I'm going to take a close eye on. If the earnings were good, I'm just going to buy to close it at maybe $20, $30 if I could. If not, I'll just let it expire. And I might do more positions on NEO. So those were my riskier, higher implied volatility positions. In my lower ones, I have XLF. Strike price was 31, did earn $29 in premium, so not a huge premium there, but it's very close to 1% for the month. Intel, strike price at 58 when I was at 62, premium 71. So again, a little bit over 1% in a little less than a month. And I don't mind owning Intel or XLF. CVM's pretty risky one. Current price was around $18.80. Sold it at $12.50 for $80. Very good premium there, almost 4%. However, it is a pharmaceutical company, and if their drug trials don't do well, the stock could easily tank. So this is a risky position, but I'll see what happens with it, and I like the premiums. Mentioned PLTR again. And then I tested out GTE. I just did one more this is actually a covered call, not a cash secured put. Stock price dropped down to 84, but I sold a covered call at 1, made $11. Not too much, but again, share price is pretty low as well. All right, next I want to go over a little bit on Schwab's Smart Street Edge. I think I said it wrong there. Some of the things that I've changed in my parameters when I'm doing my research, and then we'll look at two possible positions to look at for Monday. All right, so this is in Street Smart Edge. I did change some of the categories that I'm looking at when I'm doing my cash secured puts and covered call positions. For instance, for PLTR, and this is one of my recommendations actually. Current price at $23.90. I think selling a cash secured put at 21 for next week should still be relatively safe, though you never actually know. Stock price tanked from the 30s down to 20s. So the odds of it keep going down to 21 or $3 in a week, relatively low, I think. The delta is 0.15. Some of the other categories I'm looking at, intrinsic value, that's essentially the share price, $23.90, minus the strike price. So there's a $2.96 buffer there. I also want to look at my volume and open interest. Essentially, this shows all the Greeks from the theoretical. The basic view didn't show the Greeks, but I do like looking at the volume and open interest to see where I might be able to get better fills on my numbers. So I left the volume open interest there as well. And I put the bid and ask prices so I could see where might be a good position to get in. If you look at my account, these are all my current positions. Did put bid ask with quantities. Strike prices, again, the intrinsic value, so I could see how much money over I am compared to the strike price. It shows the percent in the money probabilities. So these are all relatively good, except for the GTEs. Days until expiration, so I could be more aware of when I could actually close positions or let them expire. I'm seeing the deltas, the thetas. Again, theta is how much per day the option's decaying, assuming all the other Greeks stay where they are. And I can see the expiration dates. Okay, so this I did change some of the filters here. You could go to columns and settings and add a whole bunch of different options in my options, but I like seeing what I have so far. I might change this over time. Next, some possible positions to look at. In PLTR, if you look at the chart for it, it's currently at 24. You can make 1% if you sell the 20 to 21 test your put for the week. So 1% a week, 4% a month. That follows my own parameters. And a little bit of downside. I don't mind owning PLTR if I happen to get assigned on it. So I think it might be a good recommendation to use. CCIV, another one, Churchill Capital, stock tanked completely because they did acquire Lucid, and Lucid Motors will be making electric vehicles. So the stock did go down quite a bit, and it consolidated around the 29 to 30s. You can sell a 24 strike. This is a monthly though, so be careful with it. But sell a 24 strike for 215 to 260. So you can make almost 10% on your money in a month if the stock doesn't go all the way down to 24. And I think 24 would be a good position to own this company in the long term. They're trying to compete with Tesla kind of indirectly, with Mercedes as well, with the electric vehicles and the premium front. All right, so those are my positions for the week. They do a lot of movement compared to what I used to have at Vanguard. I'd like to know your thoughts on what my current positions are. If there's any other recommendations on different positions you might be interested in looking at, let me know. Next week, I'm going to do my monthly passive income update, as well as how much premiums I receive, dividends, and whatnot. Thanks again for watching until the end of the channel, end of the video. I'm the investing teacher, high school science teacher, teaching others how to invest. Smash that like button, all that good stuff. It does help out the channel. Love all your support and watching till the end. Stay safe out there. Be nice to others. And I'll see you guys next time.